Yeah, welcome everybody to another meetup of the FinTech InsurTech Meetup. Today we host a meetup. It starts right now and we will maybe take until 8 o'clock. Yeah, maybe just talking quickly about the host while other people are still joining the meetup. First of all, maybe about me. So I'm Matthias from working in my day job for ISG in the workplace space, so digital workplace for banks and insurance companies. And I'm also a host of this meetup, as also Lena is. Maybe Lena, you can introduce yourself a bit.
Hi, everyone. I'm a former FinTech founder and currently in a sabbatical looking for the next job to be joined by myself. And I'm co-hosting this event for, I think, the 5th time. Looking forward to tonight's topic.
And also Jan is also one of our co-hosts. Hi, Jan.
Hello, Hristian. I'm a co-founder of a web development agency from Cologne called Lesley Li and contact tracing app Recover. And I'm also running one of the biggest fintech newsletters, fintechweekly.com, with over 20,000 subscribers worldwide.
Fantastic. And today's lineup, I would say, is that we first host a talk of Oliver, who is the CTO of Entity Data Germany, one of the biggest IT provider in the world, or Asia and Europe, I think. And he will talk about the role of the insurance companies in sustainability, how they can innovate, how they can manage their risk and so on. So I'm really interested in it, as I also work in consulting. And then we also host a panel with a lot of people from really good startups like Elena from Tomorrow and David from Ecolytiq, and also Lesley from U Impact and Hristian from the Novus Bank in the UK, I think. And we have also a bonus for you today, which is Elena, who just joined the lineup, I think one day ago. And she talks about the challenges what fintech companies have that are sustainable when doing marketing. So she will share her best learnings out of that in a very quick 15-minute talk. So I'm really curious about it, as many new neobanks pop up. I think it's a crowded space and there's more segmentation. So I think the marketing in the fintech space becomes more and more important. Cool. And as you might have heard, the topic today is sustainable finance. You might have booked your summer vacation and you might have also bought your Bitcoin after the dip, but now let's talk about one of the biggest challenges we have in this and the upcoming decades, which is the climate change. And this is, from my perspective, not only affecting car companies or energy suppliers, but everybody has to do, all industries have to do their part when it comes to mitigating the effects of this climate change. And I also think there's a huge demand from the regulator and also from the consumers. So there's also a lot of business to make with that. For example, if you're a provider for services for banks, you can maybe help them to navigate the transformation. Or if you're a bank and want to offer a differentiation to other banks, you can offer people or help them to live a more sustainable life. So I think that's there's also a lot of money to make in the space from that transformation. So basically we start with insurance and then we head over to the banking and asset management space and discover what's going on there. And also Lena on LinkedIn provided a poll, and people she just asked, the financial industry is the key to tackle climate change, and 38% said I agree. I think they just wanted to be nice to Lena. But also 26% they disagreed. So maybe we can convince also more people to agree today. So that would be a nice vote. And that the topic has traction, you can also see from money that is flowing into this ESG criteria-based assets. You can see clear growth in money that flows into these ESG-based assets, and I think it will continue. And also sustainable ETFs, for example, outperformed their not sustainable ETFs. And yeah, so there's also a sign that companies that take care about these ESG criteria, that they are also yeah, more successful.
This is our last agenda point, and it's a huge one. We have such great speakers up on stage who are David, co-founder of Ecolytiq, Chris, co-founder at Novus. We have Elena, head of impact at Tomorrow, and Lesley, co-founder of Impact. It's a pleasure having you all with us. Having this wonderful warm-up from Elena, I think it really helps to directly jump into the discussion and yeah, start with the first question, which is, how do sustainability and fintech really fit together? To be honest, I always thought a paperless office was enough to be some sort of sustainable fintech. I think already tonight I learned more about like what it really is and means to be sustainable, and I will learn a lot more the next minutes to come. So what examples can you think of why fintechs should take responsibility for climate protection? How does sustainability and fintech fit together? I would love to start with Lesley's point of view on that. Lesley, you are on mute. I would love to hear your point of view.
I saw I pressed yes. That's the most popular line in the whole pandemic, you know, you're on mute. So I'll start with fintech, what it's really about. Fintech is all about innovating and disrupting the financial and economic system. And every single decision you made in the finance industry, it actually results in real world impact in the natural world and society. And if you look at our current financial sector, they have to be too slow to recognize the negative impacts it has on our society and environment. To give you a perspective, some numbers. Since the Paris Accord was signed in 2015, quite a few years by now, banks globally, they have continued to invest in this area of fossil fuel, for example, $1.9 trillion into fossil fuel industry alone, despite knowing all these consequences are. And if you look at the global capital market, huge amount of money flooding around. It's about the mark of $300 trillion in the global capital market. And that money, it really can be deployed to do a great deal of good. What fintechs can do here, we can do is to divert this capital towards companies and the people who really try to build the future for us, try to do the good. And this is the connection, what I see. And this is what me as an entrepreneur and previously as a banker, what I'm trying to do.
That's a great kickoff. David, how would you add to that?
A pleasure. I have to admit, at this time, I usually start sleeping because I have a 1-year-old back home that starts to wake up at 4 in the morning and starts partying. So I apologize. So back to topic. So for me, it's always, you know, I always say that sustainability essentially means we need to upgrade our infrastructure. You know, the way we live, the way we travel, the way we eat, everything needs an upgrade to be more sustainable or more aligned with nature, basically. And as we're talking about an upgrade, we're talking about investments. So the house I live needs an update at some point. The way we use transport does it. Even though I switch maybe my car to public transport, most likely the bus I'm using is still running on fossil fuels. So everything needs an upgrade. And I think that is where what was Lesley pointed out is where money has a direct impact on our world. And as we have learned over the last years and years, financial institutions are not particular tech companies. So bringing together financial and tech and focusing on sustainability, I believe fintechs can do far more or helping transition to that. And yeah, so I think on Lesley's point, funneling the money, but also building technology to help banks to actually adopt it. I mean, we learned it earlier, data is a key role and so on. So it's all about technology. And I think that is where fintech actually has a huge role to play.
Yeah, and again, the point which Oliver already made, as you mentioned, that financing is the fuel, comes up in our panel, which is quite nice. Elena, do you have an additional point to the question of what the hell has fintech to do with sustainability?
I think the two previous speakers summed it up quite good. As sustainable fintechs, we have two huge advantages on our side, which is on the one hand, like Lesley said, we don't have any dead assets. So like whole, there is nothing like this in our balance sheet, especially with loans. It is difficult for conventional banks to even pursue a clear and strict sustainable investment strategy because of all their dead assets they still own. And the second one is, like David said, that through being digital, our footprint is many times smaller than of any brick and mortar bank. So the whole operations is more sustainable, and therefore also it's easier to scale for a fintech, even in terms of sustainability, than it would be for a normal bank.
Definitely. Chris, hearing about all this and the quite nice connections that are there between fintech and sustainability, what's the one key fact everyone in the audience must know when it comes to sustainability and fintech?
Yeah, absolutely. And thank you also for inviting me. I can speak with regards to the UK market, some interesting stats that really shocked me when we were starting Novus. And in particular, for example, only 1% of the deposits are ethically invested and managed. Less than 5% are invested ethically and impactfully, and less than 3% is considered to be ethical consumption in the market. While at the same time, around 50% of the people in the UK, speaking of that country that we're operating in, want to be more impactful and ethical. So I would say that there is an amazing opportunity to really provide some amazing product and experience that will make it easier for people to really be more mindful, more sustainable, more impactful. Because as a whole, from our perspective, what drives us is really combining impact and everyday money management operations, money investments, and money expenditure. So yeah, that was one interesting fact for me that is happening, and that we have a big role to play in fixing that gap.
So great to have the UK insights. Let's, in comparison, jump to Germany, and maybe Elena or David, you might have some insights and numbers on how aware are the customers here about the topic of sustainability, and how are we proceeding and performing in that way? Elena?
Yeah, sure, I can start. I don't have any specific numbers, since it's quite hard for us to estimate how many customers, how much potential there is of customers. But if you look at it in a more holistic way, I think if we think money and payment and banking and fintech and the whole sector through, the industry alone has the potential to bring the world to net zero emissions, of course, in partnership with their investment and customers, clearly. But if you think of it in like a general way, it would be possible, because I mean, it's true, the saying that there is money makes the world go round. So I guess that the potential of the whole market in terms of sustainability is immense. And if you look at the numbers so far, even also more established sustainability banks grow faster at the moment than conventional banks do. And I think it's for a reason. We have a shift in mindset. We see it ourselves. Tomorrow now has grown to 70,000 customers in just 2 years. It's something that we can see that we are at a tipping point where people need to shift their mindset in terms of sustainability, and finance and banking is such an easy switch. So I always say, in terms of sustainability, if you have quick wins, switch your energy providers and switch your bank, and then you have nearly a half of your footprint reduced, kinda. So I guess the potential is immense.
Thanks for sharing. David, I know I'm always pushing for the examples, key facts, numbers, and use cases. Can you think of anything to add here to the question of like what are the key facts, the key performance facts right now in Germany regarding fintech and sustainability?
I just tried to look up the number, but I failed being that quickly. So I think, but there's a lot of, from the big consultancies, there are a lot of studies out there how consumers are looking into shopping more sustainably. And the vast majority is really looking into sustainable products. So what you can clearly see is it's not just a trend anymore, it's something that they really care for. And there's one study, I tried to find it out and send it maybe later on, where they basically figured out that even consumers are willing to pay more for products if they are sustainable. And I think that's an interesting shift, because before that, it was like, okay, price is the most relevant factor. Now it seems like the sustainability becomes the more relevant factor, and price actually is just a second one. And I think that is very interesting, because it's not just something, you know, we have to be green now and it's a nice trend where the kids play around with. It's actually the opposite. It's like something that consumers really demanding and are really pressing for it. It's not just Germany. And what I also found very interesting is that, you know, the younger generation, which is now really demanding it, is the most influential generation ever. So if you look how much influence those generation had previously, it was limited. But nowadays, because the digital natives are really, you know, your mom probably asks you if you have to buy a new phone or TV or whatever, and they're all asking their kids. So the demand is really so massive that you can see it's nothing you can ignore anymore. And that's something that I really like. But I remember 6 years ago when I started topic sustainability and payments, it was completely the opposite. People thought I would be crazy for talking about those topics now and mixing it up. And so it's good to see that that has shifted.
And regarding the shift, Lesley, let's maybe look at different countries, maybe the country you are actively sharing your offer at UImpact.
Which is Germany.
which is
Germany. I actually have some interesting facts to share, if I may. In Germany, there are about 800 startups, right? Guess what is the percentage of the fintech startups actually have a sustainability as a core? Take a wild guess. I know we're biased here. You see, we have Ecolytiq, we have Tomorrow, we have Novus. 5%, that's all. 5% of the startups in Germany have sustainability in the core. More numbers to throw. When it comes to sustainable investment, the coincidence that it's also the 5% magic number. That's around 5% of the total German fund market are sustainable investments. Crazy, right? Let's look at people who work in a sustainable fintech area. It's 1 in a million. So we're all 1 in a million. Give yourself a pat on the back. We're all that unicorn, right? This is way not enough. What are we talking about? 1 in a million, 5%. And we're all talking about sustainability and everyone cares. To me, honestly, this is ironic. This is just not enough. And what we need to do is to push the number 10%, 20% until the notion of sustainable investment doesn't exist anymore. No one talks about sustainability because everything should be built with the sustainability in the core. And those are the numbers, unfortunately, today we have to deal with.
Quite small numbers, definitely. Anyone from the panel, maybe Elena with tomorrow, and also Chris as co-founder of Novus. What are the tasks to be done to increase this number? Lesley already shared some thoughts on that. What would you add to how to increase customer acceptance and not only awareness, as we learned, I think also while Elena from Tread was talking, it's not all about awareness. At some point you have to like push it into implementation and not only be aware of the fact that there needs to be more sustainable offers. Elena, any thoughts?
I think Eleanor also touched it in her previous talk, which is that you have to throw a better party than the ones destroying the world. So that's kind of the motto we have at Tomorrow, that we say the product has to be cutting edge. So you have to have an offer that is attractive, not only in terms of sustainability, but also in terms of user experience, in terms of fun it makes to use, in terms of fun it makes to share with your friends. She also put a huge emphasis on referrals, and I guess that's true for us as well. It's a lot of word of mouth, and especially also the zeitgeist. You have to meet it, and you have to make it something personal to talk about. You have to make the impact of one person visible in order to show them what they can truly reach if they just try with their finances, with their payments, and so on. And I guess that's the whole point, to make it a personal thing and to make money more personal and to make it enjoyable.
And I couldn't agree more with Elena and Eleanor before that. From our perspective, it's also the community feeling, being part of a movement, on top of obviously the personal feeling and the sort of empathy that we want to bring in, but at the same time excitement through different gamification features that would hopefully keep people coming back and getting more educated about the different environmental and social issues that we're facing and that are solvable at the same time. So yeah, that I would add from our point of view.
Yeah. A question from the audience that I would like to pass on to the speakers is also focusing on how to increase the awareness could be interlinking it with increasing the awareness on business angel and investor side. So how hard is it to make funding rounds as a sustainable fintech? Is there a change? Is there a switch that investors also are more open to invest in sustainability? I think it was Lesley in the preparation call saying sustainability is charity, sustainability is seen as a feature, was a sentence an investor said to myself a couple of weeks ago. So how is the topic of sustainable fintech seen from an investor side, Chris?
From an investor side, I would say last year we were reaching out more. This year they have been reaching out more, so that hopefully is good news in terms of the market. But in that point of view, I mean, we have also received obviously such feedbacks that the market is crowded. They can just add this additional 1 or 2 features and that's it. But what they typically fail to realize is the target market and really the type of person that you're targeting, that we call the conscious consumer, who is able to make their research. And it's not hard to see after hundreds of millions spent on marketing this fintech as something, then suddenly changing it to something else. That it will be easy to convince that person to, really stay with them for this or that, having 2-3 people in greenwashing department, to put it that way. But obviously it would be great, also as Eleanor said, if everyone at the end ends up doing exactly that, but it just takes time. I would say at least 2-3 years to really change everything fundamentally, and how you set up the organization, the culture, and the people that join you first, and thereafter is super critical of maintaining that sort of vision alignment and building everything with that in mind. So yeah, I hope that answers part of the question.
It at least gives an impression on your point of view, definitely. Thanks for sharing. I wonder if I may ask the following question, which is, I know within the panel I have a lot of speakers that are focusing on tracking tracking the CO2 footprint and then offsetting. So sure, within the preparation of the panel, I was kind of overwhelmed by the offerings regarding this use case. David, it's especially you that I have to place this question with. What else is it? Maybe even within the use case of tracking and then offsetting, but also aside of this use case, which other use cases can you think of to foster the thought and the relevance of green fintech?
I think it a lot comes down to the complexity of sustainability, right? So a lot of people want to act actually on something and know that they take it seriously and they want to do good, but you're overwhelmed by the choices that you have to make, right? So one day you get told reduce plastic and don't use a plastic bag to go shopping. On the next day, everyone is removing plastic bags and replacing it through not paper-based, but also paper-based, but also fabric-based bags. And then you get told, well, you have to use your fabric-based bag for 100 times until it's actually offsetting 100 plastic bags. So you're obviously not doing that, right? Because you have to change your shopping behavior, and that takes time. Behavioral change is the hardest thing. So what we need is few quick wins, and I think we can generate this through the community. We can generate this to easy things or low-hanging fruits, like switch your electricity provider, you will save X amount. Switch your bank account, you will save X amount. And these are quick. And then we need to help consumers basically to make these decisions or embed their decisions into their lifestyle. And then it becomes more easy, and it becomes a habit, and then you start changing maybe even your own behavior at some point. So I think what we need is a clear guidance, and a lot of that needs to start with tracking. So we need to understand what is actually your individual behavior and how can we help you to basically change that. And tracking your CO2 footprint is one aspect, but CO2 is only one critical element. There are many others. And I think this is where technology comes very handy again, because a lot of people starting wearing their smartwatch or something like, and tracking their heartbeats and so on. So there's this drive to, how you call it, self-optimization or something like that. And I think sustainability kind of is nice to compare it. A lot of people want to do something, but they don't know where to start. And so I would say we need tracking, we need these measurements, and then we need to educate consumers to actually start changing their behavior. But even sometimes, start even offsetting, or just move your money into the right funds to making sure that the carbon footprint that you just caused by having a vacation trip is at least offsetted in the long run, because airplanes in the future run on who knows what, but it will be for sure carbon friendly. So I think this is the aspect that giving you the choice and make it very easy for you to act on it is essential. If that makes sense.
And in how far is the regulator contributing as an enabler for sustainability within that context? Elena, do you have any thoughts on the role of the regulator in that context? Is it rather helping or hindering, or both? And in which scenarios is it helping, and in which it isn't?
Yeah, I think in my point of view, the European Union at the moment is doing a great job. They established, within their European Green Deal, they established a Sustainable Finance Action Plan, where they really try to drive investments into sustainable businesses. They do it by, on the one hand, defining what sustainable in terms of the EU is, and on the other hand, they also provide guidance on how investment products should be labeled according to their like aim of their funds. So for example, with the new EU regulation, you have ESG funds and impact funds. And I think impact funds are the one we are talking about when we talk about sustainable finance, because they are the one where the impact and the sustainability is at the core and the goal of the product. So in terms of transparency and thought and in theory, they are doing a great job. But what I think makes it quite hard is that if you have a look at the conventional providers, because they are forced to, but most of the people fail to realize that this year, banks are forced, when they talk with their customers, to ask what their sustainability preferences are. It's a law which came from the EU, so now they have to talk about it. And if you then look at the conventional providers and what they currently label as sustainable, I still find companies like Nike in there, where you don't only have problems in the supply chain, but you have also huge governance issues. So I don't understand how this can be sustainable. And that's the thing, what we are experiencing right now, that most of the funds we see are screened by best in class. And if you have a class that's, pardon my language, is truly fucked, you will have still very shitty companies in your funds. And I think that's what Elena also said in her talk, is that we're now experiencing the problem that products are labeled sustainable, and if you have a close look at it, they are not sustainable at all. And even the normal consumer can see it. And because I think the topic of Nike and sweatshops is quite known if you have a quick look at it. And so we really have the problem of differentiating what is truly sustainable and what is not. And that's what also is the problem for us as sustainable fintechs, to make sure what is sustainable and to really gain the trust. But it's also quite a chance for us, because we can prove that true sustainability is working, and it is, and that it is profitable and that it makes fun. So I guess it's a two-handed thing. The idea is good, and I think it will help driving sustainable investments. But on the other hand, it may confuse consumers. So I guess it's good for the institutional side, but for the B2C point of view, I'm a bit skeptical.
Maybe Lesley can add to this point, as Impact is focusing on that.
Totally. A few of the points I completely agree with. You talk about the EU taxonomy, where the EU is making a great attempt into bringing out this transparency. We talk to a lot of fund managers. There are issues in there on both ends. The EU taxonomy currently only focusing on the E, environmental. It's not tackling any of the S, the social, the G, the governance. What does that mean? It's an incomplete picture it's painting now. When we talk to fund managers, especially the sustainable fund managers, they get penalized for rating their funds for not being sustainable, because they are also addressing perhaps the S and the G in addition to the E. Where is that missing part of transparency can come from is what Impact's trying to do. We have a tool we created especially for that. We call it the X-ray for financial products. There is no transparency. Here you go. I'll give you transparency. You can look into the fund. You can call out the dog shit in there. You can distinguish whether it's a brown or a light green or dark green product. Empower the people with the data, but present it in a way that people can digest. In the area of ESG sustainability data, there are all sorts of providers. It's confusing, and there's an asymmetry when it comes to the data availability. Now it's available for the big guys, fund managers, banks, you name it. The guys can pay for it. The people, the B2C side, the people on the street like you and me, there's no way you can get access to that. Even if you get access to that, you won't understand it. What is needed there? Think about food product. You get nutritional table at the back of the food, right? Think about energy product. You get the light bulb A, B, C, D, and E. People just get it. Why can't we do that for financial product? And this is another aspect what we're trying to address.
That's so cool.
Turn it into a consumer product, which it is, turn it to what it is. This is made for people, then present it the way people can understand, right? And this is exactly what we're striving to do.
I understand that this is also the perspective David brings in from Ecolytiq, adding the missing piece to a transaction. So your business model, David, is as well quite data-driven. How did you build up this data-driven and database, and what exactly are you showing aside of a transaction?
So we basically rely on a lot of scientific data. So we looked at what science had brought up over the last years, and surprisingly, a lot of the, especially carbon studies, are industry focused. So it's the input-output models, which always look at industries. For me as a consumer, they're not relevant at all, because I still don't know. If I know what the meat industry is producing over the last 15 years, I still don't know what the steak actually on my table is. So obviously there are other studies that have looked into it because there was some interest. But if you look at all of those industries and you really want to bring the consumer perspective into it, there's a lot of data missing. And because we had to start somewhere, we just looked into all of the studies that we found that have looked at it. We have built up methodologies and etc. Because we know they're not perfect, because a lot of information is missing, we made them public. And we basically asked every research institution that we know, and we ask even more, to start actively contributing their results and their new findings into that public repository, to making sure we can actually fill this gap. And over the long term, it's a huge project. Not sure where it goes to. So far, it's working very well, for at least for us, and it's another aspect of the business, really bringing this level of transparency that we require as consumers, also on the basically background information on the data level. And if we have to work with assumptions, we need to tell consumers that there is no clear study. And one of my favorites is there's a hotel study that is quoted in a lot of papers, how much the hotel industry is actually contributing, and so on and so on. At the end, if you look at this study, there are 40 hotels that are looked into in 5 categories. They're all in Switzerland, and that's it. But this study is very famous in Europe. It's like, how can you build an entire industry and kind of measure that on 40 hotels in Switzerland? That's not really representing for Europe. But that's the problem, right? No one actually was very interested before in what's a better recommendation, a 1-star, a 5-star, whatever, right? And I think this is where we actually need to look at the data and point it out and saying, you know what, this is what we have. We need to believe in it. And we hope, and dear government, you have fundings for that, to look into that a little bit deeper and help scientists to actually have a better and broader study. And again, I think this is where tech can also be very helpful, because it's scalable, it's cheap, and it can be very, very easily adopted. But maybe one sentence to the regulatory side before the question. I think my take is, I think regulators picking up. So it's not a pure consumer-driven thing anymore. So regulators actually looking into the space, the EU Green Deal helps, etc. But they're not yet driving the discussion. And I think that's what needs to change, because I think what everyone pointed out is we need clear guidance. What is sustainable and what isn't? And if you look at discussions, you know, French people love their nuclear power and they believe it's 100% sustainable. And it's true when you look at CO2. There is no CO2 emission using nuclear power. But, you know, having nuclear waste for, was it 56,000 years and keeping that safe is kind of insane, of saying, you know, we want to save future generations, and we're actually building up on a scale of 65,000 years. I can even think that far. So yes, I think what we need is a clear regulation and a clear guidance of what is sustainable, and then obviously the market will adopt around it.
Thanks for sharing your thoughts. I think with Lesley and David, we have 2 providers on our panel that enable green neobanks to add such information for their consumers in their banking. Hris and Elena, offering this how to become more sustainable feature to your customers is the one side, I'd say. on the other side, I'm interested in how much sustainable are you yourself in the complete value chain that you are creating. So how about sustainability on the inside of a neobank? Do you have any insights on that?
Yeah, Elena, do you want to ladies first, or I can just dive into? Yeah, from our perspective, I mean, we're going through the B-Corp preparation process, and I can say that from the internal perspective, an organizational perspective, that has been really invaluable experience. So I recommend to anyone, obviously. We are obviously still working remotely. So we have been conducting a lot of kind of research and data into how sustainable are we as an organization, and that is still work in process. But we're setting up everything in terms of how we're going to measure it and how we're going to calculate it. That would obviously be set in stone for the future. So we are preparing on these fronts.
Mm-hmm.
Yeah, us too. We already are a certified B Corp, so I know the struggles you are facing right now, Chris. It's a very intense but very rewarding process, I can say. For us, impact and the whole terms of CO2 is very at the core of our product. So just today we had our Impact Baby meeting, which we have every 2 weeks. And we talked about our carbon footprint as a company and ways to further reduce it, where we can maybe also improve our measurement, because we have to be self-critical with ourselves. We can't measure everything yet, because data availability is really a huge point for us, especially in the supply chain. So we measure our carbon footprint, we offset our carbon footprint, we use green electricity, we measure our service, we measure our Zoom meetings. And I guess that's what's truly about, to not be only sustainable with your products, which of course is the main point, especially for banks. You have to have truly sustainable products, but also have an eye on your operations, because for conventional banks, especially if they have a lot of I don't know, do you say stores? For me, it's a store because you can buy products there, but especially if they have those, they have a carbon footprint that is huge. So from my previous experience, I guess the carbon footprint was around 10,000 times higher than it is for tomorrow today. So I think that's something where fintechs really have a huge advantage in comparison to conventional banks.
Great. Kind of summing it up, or at least handing a few advices to the audience, which might be interested in further readings, further information. Which books, podcasts, role models would you recommend to our audience, David?
You caught me. Can someone go first? I have to think for a minute.
Anyone else has input on that question, Chris?
Yeah, I would recommend Reimagining Capitalism in a World on Fire. The author is also a Harvard MBA lecturer who is teaching on this, so I found it super interesting. But yeah, in terms of podcasts, I think Vevolution, it hasn't been since last year, but I had so many podcasts to catch up with. So that's one.
It'd be great. Yeah, it'd be great if you could share those two advices in the chat, so the audience, we make sure they receive it. Anyone else adding to that question, Elena?
Yeah, for me, maybe it's not a podcast or a book, but what I think is truly underestimated is the topic of negative emission technologies. What we are talking about here with sustainable finance and with reducing our footprint is a lot of stuff in terms of efficiency and reducing our footprint. But there are ways, at the moment, there are 7 ways how we as a global society can maximize the carbon the atmosphere is able to take. So we can maximize our carbon budget And I think that's something that's truly underestimated in the whole climate debate. And I think everybody should take a look at it and yeah, read into it, because it's really interesting and inspiring to see that maybe if we don't manage it by efficiency, there are other ways how we can battle this climate catastrophe if we just want to.
Great. So I'm reloading the Slido question tool to see whether we got any new questions for the panel, to also include the audience now in the discussion.
There is a video I would really like to invite everyone to watch. It's a short one, 40 minutes. It's produced by the WWF, Too Big to Fail. You can search it on YouTube. Basically, it's a very emotional way they're explaining about sustainability, the connection with finance. It started with our human history, how in one person's lifetime, how we actually managed to increase the global energy consumption by 8 times, and reducing the wilderness of the nature world by half, and how it's the action points can be taken by the financial sector and by everyone. Highly recommended.
Thanks.
I can send across the link.
That'd be awesome. We got one question on Slido saying, are you able to reduce your carbon emissions by using green data centers for your fintech solutions? And would that have a material impact in your emissions?
Yeah, I guess that's a question for us. Well, we are currently exactly exploring this, and we're using Amazon Web Services. So we are looking into what that means for us as a business as well, from a B-Corp perspective also.
But isn't Amazon taking care of the emissions and the sustainable energy?
We would like to think so, but
they're lagging behind, maybe.
Actually, we are at AWS as well, and we there is a tool. I can quickly search up the link after I finish talking, where you can measure how much greenhouse gas emissions your server is emitting, and we included all our servers there. And for us, it's only 0.5 kilo a day, so it's very, very little. For the whole last year, it was just 183 kilograms, so it's not a lot. But I think what you have to keep in mind is that product and tech and development also have to build very lean infrastructures in order to make it possible. And that's why we decided not to switch yet, because the environmental impact versus the workforce we would need for it isn't on eye level. So we decided to just offset it and not switch yet. Maybe it's changing in the future, but for now, that's how we decided.
Okay.
And the add, right? So if you already do it, it's fine. If you look at a provider that has done it and does a great job, let's go for it, because I think every single thing you do adds up to a lot, and I think that's where it obviously is one of the things that you need to care about. So if you look at your own company measures and your impact, one of the things will be for sure your data center. And regardless, like Elena said, sometimes it might be easier to offset it, which for sure always is at some point, but if you can afford it, it's better to switch to someone who's actually truly built a sustainability model around it. So yeah, it does help.
There's a Greenpeace study on it, and the most sustainable server provider who can also manage a lot of data is actually Google. So if anyone in the audience is just setting up their startup, maybe starting with them instead of AWS. But I guess, like most of the times, in terms of big providers, in terms of climate and emissions, they are not the wrong choice, because it's easier for them to scale than maybe for little providers. So, but not to talk about maybe social dimensions and data security dimensions and so on, but that would be a hint from my side.
I would like to sum it up, as we currently don't have any more questions from the audience and time is running. I got one last question for you, which is, imagine you have one free wish. Pedro, do you have any question?
Oh, I'm sorry. Sorry, I didn't realize just.
Okay, don't worry. So the question to the speakers is, if you have one wish free to achieve your startup's mission faster and better, what would that one wish be? Who's up first?
Maybe from my perspective, it's that people more easily realize the power that they hold with every penny that they have and how it can be used for good, and be more mindful about it.
That's a good one.
Yeah, I guess it would be the same for me, because I think money is truly a very democratic vehicle that we all have in our pockets. So even the capital markets, if you look at them in theory, at least now we are kind of locked in a complicated system, but they are very democratic. You own part of the company you invest in. And I think if we would truly use it like that, it would be so great, because we as a whole, as a community, could really have impact, and just by shifting money into the right direction.
David, what's your thought, your wish?
I think it's a bit sad. I think it's about awareness, right? Using the awareness and your interest to actually start doing something, and it overcome this hurdle. It's a very nice anecdote. I have here next in my neighborhood in Berlin, there's an amazing vegan Asian restaurant. And every time I go there with close friends, which I know they're meat lovers, whatever, if I say, let's go to a vegan restaurant, they say, no. If we go there without telling them it's actually vegan, you tell them afterwards, they all satisfied, like, wow, that was really good. And it's this, I don't know what it is actually is, but it is this kind of thing that stops us. I think be more open about it. Not everything is so bad about, or everything is great about sustainability, basically, and be more open and try it out. And if you don't know where to start somewhere. It doesn't matter. It will lead you the way to the end. And I think trying out a restaurant that is vegan is actually a nice thing, because I never had any bad experience, but getting there is the hardest point. And I think that is what my wish would be, is like, do this first step, try it out. If you don't like it, don't go there anymore, but be there at least once. And I think that is to every category in sustainability.
Great. Lesley.
Love that. That's totally right. If you look at, we can talk about risk of not doing sustainability for the rest of the night. But what is the biggest risk? The biggest risk is doing nothing, right? As simple as that. It's just like when we talk about competitor, people ask me, oh, what is your biggest competitor? I'll say, you know what? It's people doing nothing. People do not change. People just stay with what it is, status quo. Like David said, do something. So my wish will be, everyone go and think about one thing, just one thing to do tomorrow or even tonight.
Thanks so much. So many great insights, learnings, and content that you provided us with tonight. Thanks, Chris. Thanks, Elena. Thanks, Lesley. And thanks, David, for joining us on tonight's panel. I will hand over to Matthias to sum this tonight's event up.
Yeah, there's not much to say from my side. I just would like to thank everybody for participating. And the next meetup will be in September 16th, because we thought everybody is sick of online meetings and might want to enjoy the summer and having fun, drinking some beer, making love, and then we see each other back in September. So that's from my side.